Hi, this is Paul Allen with PIM Tax Services, and the purpose of this video is to give you a little more detail on how to use the rental property spreadsheet that I developed and is posted on my website. Alright, so the things we're going to go over is the designed purpose of the spreadsheet, how to find the spreadsheet because it's actually possible to be watching this video without knowing where the spreadsheet is. And then we'll go over the various sections on the spreadsheet to include the information on your property, the rent collected, your operating expenses, your travel expenses, any additional documentation that we might want to go over, and then I'll give you just a couple of final thoughts about being a landlord. Alright, purpose of the spreadsheet. What the spreadsheet does is it puts everything in one place so your tax return can be efficiently prepared. So these are the things you need to have at a minimum to be able to have your taxes prepared either by me or by someone else. This is what the spreadsheet does not do. It does not replace actual accounting. So if you need bookkeeping and or accounting, and if you're operating your rental business as a business, you may want to strongly consider doing that. But this does not replace actual accounting. Alright, the spreadsheet does not satisfy the IRS's requirement for record keeping. You still have to maintain good records, receipts, and proof of the expenses that you're claiming and the rents that you collected. And this spreadsheet does not do that for you, and this spreadsheet also does not cover every possible situation. The spreadsheet does, however, I think satisfy about 90% of the landlords out there, so it's a really good starting place even if it doesn't do everything. Alright. This is how you find it if you haven't already. All right, you go to my website, which is pimtax.com, PIMTAX.com, and there is a menu bar across the top of the website, and there's one of the tabs on the menu bar called 7 Tips to Prepare. You will hover your mouse over that, and that will expose a drop-down menu. That drop-down menu has tax tools on it, and then you click on tax tools, and it takes you to that page that's displayed. And then toward the bottom of the page, I have linked in all of the various helpful tools that I've developed, and 2 of them are the single rental property income and expense spreadsheet and the multiple rental properties income and expense spreadsheet, and they are very similar. The multiple one just has room for multiple properties to be input onto it. The single one just has 1 column for properties. Alright, when you download it, that's what it looks like. It is an Excel spreadsheet. You actually don't have to download it. You can just click on it and it should open in your browser. So you don't have to have Excel installed on your computer to use it. It should open in your browser. Alright, and that's what it looks like. 1 column on the single property spreadsheet. That's the one that I have open here. And what you're going to put in that column is information. And I have it color coded for the various sections, and we'll go over each of those sections now. Alright, the top of the sheet is information about the property that is your rental property. So the address of the property, the date you purchased the property, if you ever lived in that property as your primary residence, the dates that you lived in it as your primary residence, the type of property that it is. So SFH is single family home, MFH is multifamily home, where it might be a duplex or a triplex or something like that, a condominium, a mobile home, it may just be a plot of land that you're leasing out, whatever it is. List it there for me, please. The date you first held the property out for rent. This is not the date the property was rented. This is first rented. It was the date it was first made available for rent. And there's a link there because it's also known as the placed in service date. And there's more information about how to determine what that date is at an article I wrote that's linked in there. All right. Next, number of days the property was a rental during the year. Now, a lot of people interpret that to mean the number of days the property was rented during the year. That is not what that says. If it was available to be rented, it was a rental property. So we need to know the number of days it was available as a rental property, not the number of days it was rented. And then the final line is the number of days you used the property for personal use during the year. Okay, so that is if the property is in service as a rental property, and then it's in a nice location, like it's at the beach, and you want to use it for 2 weeks, and you go and stay in your house during that time. That's personal use days. Okay, if your property, if you go and stay in your property to do work on it because the former tenants left, and you want to do some work on it to get it ready for the next tenants, then that is not personal use of that property. So those days don't count. If any day you work on the property while you're staying there for at least 8 hours is not personal use time. And the other mistake I see commonly made here is that the property was your primary residence, say from January through April, and then on May 1st you turn it into a rental property. It was not personal use from January through April because it was not yet a rental property. So it can only be personal use after the property has been turned into a rental property. Okay, we can start talking about money now. And the first spot is how much did you collect in rent for the entire year. So I don't need a monthly breakdown to do your taxes. I just need the total amount collected during the year. Additionally, I need all of the rent collected during the year. So not just the part that your property manager handed over to you, but all of the rent that the tenants paid has to be claimed by you. And then you claim the amount that you paid the property manager out of that rent collected as an expense later on. But all of the money that your tenants paid for rent is included in this total. If your tenants paid a security deposit, that is not included in this total until you determine that you're keeping it. So when the tenant moves in and they pay the security deposit, it is just held as a security deposit. It is not rent. When the tenant moves out and you determine that you're going to keep some or all of the security deposit because the tenant has done damage to your property, then that amount is converted to rent and included in this total. Okay, these are your operating expenses. And again, I just need annual totals, not monthly breakdowns or anything like that, just the annual totals. You may have paid to advertise the property to attract tenants. That would go here. Cleaning and maintenance. So maintenance is defined as things that maintain the property, which sounds obvious, but sometimes, for instance, landlords will have their property painted. Well, painting is generally done as maintenance. If you don't paint your property, it will deteriorate. So painting is maintenance, for instance, so not a repair. Commissions paid. If you employ an agent to find tenants for you and you pay that agent commissions, those would go here. If you have the property insured, which I assume you do, make sure you know what you're paying annually for insurance and listed here. Legal and professional services, that's your lawyer, of course, tax preparer, accountant or bookkeeper, etc. Those professional services are totaled and listed here. Property management fee, this is where you get to say how much you paid your property manager from the rent that was collected and listed as an expense here. The interest you pay on a mortgage on the property, assuming the property has a mortgage, then the interest would go here. Any repairs done to the property. Now be careful here. Adding a deck is not a repair. Adding a deck is a capital expense. And capital expenses are not operating expenses. Those are counted elsewhere. If you purchased any supplies for the property during the year, you would list the total cost of those supplies here. Real estate taxes, self-explanatory. Any real estate tax that you paid on the property for the year gets listed here. Utilities is your electric, gas, water, sewer. The portion of your cell phone bill that is used for your business, the portion of your internet bill that is used for your business can be included here as well. We can talk about that. And then the other category, pretty broad. I usually see things in that category like homeowners association fees for condo owners or civic association fees, postage, etc. There's a wide variety of things that can be included there. All right, travel expenses, which are actually operating expenses, but I wanted to list them separately because they're a little more confusing. Miles driven for the rental property. If you drive from your house to your rental property because it's in the same town as you, that's generally not deductible mileage. However, if you have a home office at your house and you're driving from your home office to your rental property, that may be deductible mileage. Talk to somebody about that, about the unique facts and circumstances of your situation to determine if your miles are deductible. If they are, then we also need to know the type of vehicle and the year the vehicle was placed in service. And other travel expenses would be if you have a property out of the area and you need to go to it. So for instance, I live in Virginia Beach. If I had a rental property in Florida and I needed to go down there and do some work on it or check on it or something of that nature, then my travel expenses to Florida and back could be deductible. A question that I'm asked frequently that I want to go over here is the travel that's not deductible, and that is travel to figure out whether or not you want to buy a property. So if I don't own a property in Florida and I travel to Florida to look at properties and then I don't buy a property in Florida and come home, that travel is not a business expense. Okay, I cannot claim an operating expense for travel on properties I don't own and operate. So if I go down there and look around and then I do buy a property, then it's an expense that I can deduct on my taxes. But if I don't buy the property and I don't own a property in that area, then it's generally not going to be an expense that you can deduct on your tax return. All right, other documents that might be helpful include a depreciation schedule. If the property was in service in a prior year, then the most recent depreciation schedule is highly useful. That is usually looks like a table. It's usually also printed landscape if you have a hard copy of your prior year tax returns. That can be really useful for me to know what the accumulated depreciation is on the property and the original basis, etc. And also then from the purchase of the property, your settlement statement or HUD-1. It's basically the same form after Dodd-Graham saved the world for us all. They changed the name of the form from HUD-1 to settlement statement. And now if you sell the property, you'll also get a settlement statement as the seller. And those two forms can be useful in determining some additional tax deductions for you and also in determining the basis in the property and any capital gain you might have from the sale. So I'd like to see those if I can. Okay, final thought. You should be treating your rental property business like it is a business. The IRS is giving you business deductions on your tax return, and so if you get audited and you're not treating it like it's a business, you may lose some of those deductions. So what do businesses do? They keep good records. They issue their 1099 miscellaneouses to contractors that do work for them. They do budgets and projections and a myriad of other things. But if you're doing those things, then you're pretty much treating your business like it's a business. And you should be fine at examination time as far as proving that your business is a business. All right, that's it. If you have additional questions or concerns, you can contact me via email at paul@pimtax.com, or you can call me at my cell phone 757-407-4189. Thank you very much.